Hello everyone, we are team number 7. Today we are going to research the stock of Meta platform.
Formerly known as Facebook, Meta has the largest user base and advertising business in the world. The company continues to promote technological innovation and business expansion, aiming to make breakthroughs in social media, virtual reality, AI, and broaden its business scope to increase revenue sources. After analysis, we recommend buying Meta stock for the following reasons. First, the company's leading user base and technology can mitigate risk and challenges brought by external environment to a certain extent. Second, in an in-depth analysis of Meta's financial condition and security and comparison with major competitors at home and abroad, shown obvious advantages. Third, there is a strong profitability. The company's revenue and net profit continue to grow, and the leverage ratio is low, which indicates that the company's financial risk is relatively low. First, we use DCF and football field analysis found that the difference between DCF over the next 5 years and current free cash flow is very small. Fifth, the company's over-reliance on a single revenue model in the sensitivity analysis does have the structural risk of income, but it can be solved by strengthening innovation and expanding the social ecosystem. In a world, Meta has a strong market position, sustained business growth and innovation ability, strong financial data, and a good development prospects. In terms of stock price, Meta's stock price has a good historical performance, showing a steady upward trend. Faced with uncertain factor brought by market competition, Meta has a great advantages in terms of number of users and advertising revenue. Therefore, investors can appropriately buy shares of Meta as part of their portfolio. Next part is SWOT analysis.
Okay, look at the strangest pictures. We can see it holds 4 of the top 6 sport and has a huge presence on social platform. And then we can also look at weekly's part. Advertising revenue, for example, account for over 97% of total revenue. Meta should Meta should develop the business model with addition service. Next page. Political and legal factor. The main limits on expansion are freedom of expression and security. The main economic resource is advertising, but customer increasingly hates the bad experience of heavy advertising. So different technology is the first. Next page. Meta Financial Group operated in a very competitive saving and loan industry. Saving and loan industry buy their raw material from suppliers. Update technology build supply chain, attract more customer less established industry barriers is necessary. Welcome, my net partner.
Okay, next part we are going to research the fundamental ratios. First, we can see the history share price of Meta platform. We can see that in the chart from 2018 to 2022, the share price of Meta platform has a continuous increase, but in 2022 it has an intense decline. So the next part we are going to research the operating efficiency. We pay more attention on the working capital turnover. We can see the chart that the working capital turnover has a continuous increase over the past 5 years. So in order to predict the future 5 years, we use some financial assumptions. The first is about the sales growth rate. We can see the chart that in the past few years, Meta platform has a continuous increase sales growth, where there is an intense decline in 2022. It may because of the multiple factors, such as the market situation and the risks we mentioned before. So in this reason, we predict that the sales growth revenue will decline in the next few years and then remain the range for the next 5 years. Okay, the right person is about the CAPEX. we can see that in 2022, the Meta platform has an increase in capex. It means due to the huge investment in the Meta universe, which includes the new product and updated facilities. Due to this reason, we researched that the capex will continue to increase for 2 reasons, and then remain the average level. We can see that in the chart is 17.4. So due to the financial ratios assumptions, we can calculate the financial ratios of the future 5 years. It's about operating efficiency, leverage level, and probability level. So it's a lot of statistics. So we use the deposit analysis to research it. From the deposit analysis, we can see the profit margin has a continuous increase over the this period, and the next we are see the financial leverage. We can see that in the chart that it remains the 1.1 to 1.4. So it means that the Meta platform has a good control of its debit levels. And the next part, we can see the orange line in the chart is about the return on equity. We can see that it has a continuous return on equity over this period. So the next part.
Next, I will talk about Meta's valuation. We use DCF and football field analysis. Firstly is DCF. DCF is commonly indicator analysis to determine whether a company is worth investing. We use the WACC, which is the discount rate, and the free cash flow over the past 5 years to calculate the result. The result for the next 5 years is 116.16, and the result for the last 5 years is 118.36. We can see that the DCF in the next 5 years is lower than the current free cash flow, but the gap between the two DCF is very small. What's more, Meta's recent investment in the Meta universe have put the stock on a steady upward trend. Although the future profitability is not as strong, it is gradually stable, and the Meta stock is still worth investing. But we should also note that the DCF relies on an estimate of future cash flow, which only provide one possibility. Through DCF, we can only prove that Meta may be worth the investment in the future. We need to be careful with these investments. And the next page. The second is football field analysis. The purpose of the football field valuation is to correct a visual summary of the valuation analysis performed on the company and to show the range of valuation based on this valuation method. We can see in this analysis that it's not just limited to DCF. In this chart, we can also see a future valuation of Meta based on DCF, PE, EBIT, and so on. And the next part from Chengxu.
Okay, sensitively analysis is an analytical method of setting the sensitivity of model output by inputting the WACC rate and the terminal growth rate calculated in DCF. We can get the following table. Okay, next. After that, we will talk about the challenge faced by Meta company. First, the number of users may stop decreasing or even decrease. As a social platform, the size of the user based on the level of user engagement with the product are statistically to success. However, compelling products and services such as TikTok may have reduced some users' engagement. Second, almost all of the Meta's revenue come from advertising. Currently, almost all Meta's revenue come from ads on Facebook and Instagram. Customers who place ads do not have a long-term contract with Meta. Third and last, Meta faces strong competitors in all aspects of its business, including Alphabet, Google, and YouTube, Amazon, Apple, TikTok, Microsoft, Tencent, and Twitter. In response to those challenges, we believe that Meta can implement the following strategies. First, motivated innovation. Meta needs to innovate and develop new features of product to meet users' needs and interests. Meta can continue to follow up on the Meta universe product to fund the blue ocean of the market. Second, expand the social ecosystem. Meta can consider expanding its social ecosystem. This will help improve user experience and enhance user stickiness. That's all. Thank you.